So welcome to the session. Basically, when we talk about key levels, those are the areas where we are waiting for a reaction before, or areas where we wait for entry. And those key levels, of course, the most popular one is your order block. And we have order block, you have Rebecca. Then we have fair value gap or imbalances. And then we have only the low and the high low. You can focus on this when you are defining your key level. Starting from another block. Another block, of course, will be that candle that patched the liquidity, that filled the liquidity, or that tested another existing other block. So that's what we call another block. And the one that tested, patched liquidity, filled the liquidity, or test existing OB. So this is because on the block, of course, there are so many types of the blocks. This time, I want you to understand this. Patch the liquidity, fill the liquidity, or tested existing OB. So that's what we call another block, and that's what we must use as a key level. Bring it to the chart. If you go to monthly time frame, you can easily see can I save this? Let me save this first of all. So I can even do it. So when you're working with a key level, if you start from the bottom, you can easily see that you have what? You have a patch that took place around here. If someone asks you to mark key level, this candle that patched the liquidity is your other block. You remember how to mark other blocks? You have seen that in the videos. So this is your first key level you have here. Then the next key level you can see is what? Is this imbalance, of course. This time I'm talking about other block. So this time you have this candle that pushed after taking this old low. Then this candle went higher, and this is how it closed. If you want to mark this candle, if you were to mark this other block, if this candle did not close above the wick, so you mark from the open of this bearish candle, this area as your area of your other block, as you can see, as area of your other block. So where is the first test? The first test is here. This is your first test. Another test is here. Then another one was created here. Which was tested a little bit. Then market eventually come back to this level for the sake of liquidity, for the sake of structure, if you understand. Then you can easily see how after filling this imbalance, this candle was engulfed here. This makes it a bearish order block as your key level for these possible sell opportunities right here. It was being tested, then market was trying to go down. As you can see, if you look again, and this candle, after testing this area, the first bearish candle that was engulfed, which is this one, was engulfed by the wick, to the wick. The wick was also engulfed. This can serve as your key level. Remember, this is your monthly key level. After that, this candle that came to fill this liquidity at the same time testing this existing order block was also engulfed. After being engulfed, becomes what? It becomes another liquidity. It was engulfed to the wick here. So your zone is supposed to be here. This is your other block. Market came back to test it and then went higher. Went higher to take out this high. And also feeding what? Feeding liquidity, which is this imbalance that was left behind. Now, market went down, of course, to test this area again. You do not have to know everything here. You have to know what market is printing at the moment. Now, market, after that, market do what? Market took out this high by engulfing the high, Okay, someone said record, I'm recording Mr. Bob. So engulf this high, making this another block right here. Can you see? I think the candle closed. Let's see. If it didn't, then you mark this area as your key level. If it didn't close above the high, you mark that area as your key level, which was not tested. Then the market went higher. So went higher to take out this liquidity. By taking this liquidity, another other block was generated around here for a possible bearish move. So this other block being tested, you look left to see the closest key level, which is this imbalance you have here. Then market tests this imbalance and then went higher, creating what? Creating this other block. This one you have here. Which is your recent key level you have. It may be broken. What you have to do is to follow what you see inside here, because the market has permission to come back here and go up. So, or test this area and then go higher, because you still have a key level around here. So you are trading, your focus should be this area was taken. The area was taken. Now you must mark this key level, this imbalance, and then you mark also this key level. They are in the same, they're in the same level. So you can see how market takes all the high and it makes a reversal. Fills the liquidity, which is imbalance as a key level, then it goes higher. You can decide it was reacting to different types of other blocks, as you can see. Okay, this is this is this is how you should be marking what? You should be marking your key levels. Remember, we are a monthly time frame. So when you are doing analysis, make sure you apply procedural time frame analysis, meaning or consecutive time frame analysis from one time frame to another. Here is what challenges most of you. External liquidity was taken. Market is going to seek something to do here, maybe to take out this high. Remember, when market is here, the reason market made the reversal was to take out this liquidity. So you have to understand. So when the market is going higher, the main purpose is not to take out this high. The purpose is to the left, because market is going up to clean out something here. The mission is here. The mission is not these highs. Okay. I don't know if you understand this. Let me show you. The moment price went higher into this retraded rebalanced zone, I think I talked about that. Don't remember? Then it came back to take this to test this area. At the same time, taking this low. Then after taking this low, market went higher. The purpose of this market is not to take out this high. The purpose is to go and fill this imbalance. After filling that imbalance, mission is complete. Market will go down again to test certain level, take some liquidities. Then after completing the mission here of reaching this area, market starts going higher. The purpose is not this high. The purpose is here on the left. You can see. Always, when you see price going to take external liquidity, this current external liquidity, look left, there is a key level market is going to look for, which is imbalance, something to balance one, or imbalance or the high, if you can understand. So the purpose is not this area. The purpose, after taking this area, the purpose is right here. Then after that, market comes back to look for what? To look for liquidity. This area. Liquidity is taken. Then this push, the purpose or the mission is not this high. The mission is the liquidity resting here, either imbalance or all the high. So if you mark here, you can see what happened. After taking this, all the high, market made a reversal. Market made what? Market made a reversal. And it came back to this key level. So what does it mean? This means every time you see a high is taken, try to see a reason that will make price to come back. So this is the area. This is the area. Now, what you do, you are only monthly time frame. You have to go to one time frame lower. One time frame lower. One time frame lower. So let's see what you see when you go to a time frame lower. Go to weekly. When you go to weekly, you can easily see a clear break forming. If you don't see a break, you are likely to see you're going to see another block. So what we call concept time frame analysis, you go one time frame lower to expect what? A certain pullback. A certain pullback, right? Because you're going to see after this liquidity is taken, you're actually going to see certain engulfing candle. For example, if you are here, this time you are using daily structure. Daily structure, as you can see, market was taking the lows, rejecting the lows, breaking the highs, rejecting the lows, breaking the highs, rejecting the lows, breaking the highs. This market was bullish. Then here, after this ever, at the same time, taking this liquidity, if you go to 4-hour, one time frame lower, I mean daily, one time frame lower, you go to daily, one time frame lower, see what happens. On this daily time frame, one time frame lower, market went higher because every time we have expansion, we expect a retracement or reversal. Every time we have expansion, we expect a retracement or a reversal, right? Try to see what happened. So if I ask you to mark another block here, another block, these two candles, they were engulfed by one single candle. You can even mark this one as your key level. And then after seeing that, you start following that move, that move. For example, this is another key level on your daily time frame. This is your another key level because it was engulfed by this candle, this bearish candle. So this is a test. This is a test where you should be looking for sell opportunity. Remember, you are on a daily, you are following daily key levels. Again, this one, you can see it was taken by this candle, but it did not engulf the wick. So you mark from the open right here. So this is your test. This is your test, right? Price come back and test it again, but this time this is your key level. You have on a daily time frame. This means you will be looking for possible sell opportunities during this test. During this test, right? Following the same model we talked about. Following the same model we talked about. Remember, you are on what? You are trading daily. You are trading what? You are trading daily key levels towards what? Towards weekly zone. Weekly zone. Don't forget that. You haven't yet seen what? A perfect confirmation of what? Of break. So you are trading a retracement. Assume that the chart is like this. Then on a daily, look at weekly. The chart is like this. You are trading to come back inside here. You don't know if you're going to see a break. You are trading to come back here because the break will be confirmed on a weekly. Because remember, liquidity being taken, this one is on a monthly time frame. So you go on a time frame not to confirm. So you get a break or confirmation on a weekly. By this time, assume that you want to start trading from the top, whether it breaks or not, you are trading a retracement towards here. While we are waiting for what? We are waiting for a confirmation to come back here. Okay. So procedural analysis is the key. Is the key if you want to understand what? If you want to understand the key level. Procedural analysis, meaning one time frame lower, one time frame lower, one time frame lower, one time frame lower. So if you if you come, remember, every time you trade, make sure you use the 4-hour as your key level if you're going to trade the daily candle. So as you can see, price was dropping until we break this area. Now we've got a pullback. We've got what? We've got a pullback. Also, remember the nature of a pullback, and most of the time, as I always say, it's like going to give you like something like A, B, C collective move, right? If you understand that. So you have a push. When the pullback is coming, most of the time, it's going to give you A, B, C, right? Before we move. Some will form and we never see it. For example, it may form like this. It's going to be A, B. We've extended the move C. Okay. A, B, C, for example. So that's the nature of a pullback. You have to train your eyes to see that. Now, once weekly is tested, then we have what? We have another weekly zone being created. So this is your weekly key level. This is your weekly key level. So once the price is testing this area, you must stay bearish. In your mind, you have to stay bearish. Then the price dropped and then created another key level here. The key level is formed. You have a question about engulfing this and how it looks like. So simply engulfing candle, when you have a bullish, for example, this bullish candle, it's when another bearish candle forms and closes below the open. It's not necessary about the wick, below the open. That's what we call engulfing, below the open. So for example, you may have a bullish candle, and then you have a bearish candle. Bearish candle trading below the open of the bullish candle. So this is the wick. Here you have a wick. Here you have a wick, for example. You have a wick. Then, as you can see, this candle this bearish candle engulfed the bullish candle on the body. On the body, not necessarily the wick. If it engulfs the wick like this, that's fine. Then your other block starts from the wick like this. But if it engulfs the body like this, without breaking the wick, even if it is like this, it's an engulfing candle. And during the entry model on a 15-minute time frame, if you see it like this, that's your model. You have to make entry. So it must look, it looks different. Sometimes you may see different candles. For example, you see one candle, you see another, they are all failing to break. And you see another is breaking, another breaks, another breaks. For example, like this. Still, this is your other block. It may break like this. If it breaks like this, your other block is here. As long as the candle that broke the law came here in one move, others failed to break the law, the open, but this one went in a single move. So this is gonna be your key level. If you are on a 15-minute or 5-minute, if you are trading 4-hour, if trading 4-hour candle, you have to enter on a 5-minute. you can easily open your trade around here, or you wait for a test. You wait for what? You wait for a test. You can enter here, stop loss above here. If you are on a 5 minute or 1 minute, if you're going to trade the 1 hour candle, 1 hour candle entry is on 1 minute. So, and some of you also get mistaken, and your trade, the trade will continue to go without making an entry. For example, a new candle start, trade higher around here, and then start going down. And you see something like this. If you see this, you have to understand that a test has already happened. So don't wait for something like you are going to see a clear pullback to come back here, to go down, then you call it a test. No, this is a quickest test. You have to immediately enter around here when market is testing. Do not move your stop loss. If market comes back around here, you wait. You wait. You don't move your stop loss. You wait. So that's how to identify what? That's how to identify key levels. For example, when we talk about the test, you can see this candle traded lower to take out this low. At the same time, feeding the wick. Big wick is a liquidity also. Remember, the block can feed the liquidity. Okay. Then once this happens, can you see this is how this candle engulf this candle? Then this is gonna be what? It's gonna be your order block. And this is a test. 10 minutes left. I will send the link again because I want to draw the issue into market maker template. I will send the link. So this is gonna be your test. So you have to understand that. For example, you can see this whole candle out trade higher with a strong momentum with all of these bearish candles. All of them, this is a key level. Your other block is supposed to be here. This is supposed to be your other block. Yes, we do some refinements, we put here, but this is gonna be your other block because they were engulfed by a single candle. All of these bearish orders were engulfed by a single candle. So this is gonna be your other block. So when liquidity is taken, seeing this, for example, seeing this, liquidity is taken around here. On the left, what do we have? The minute target is here. And you have to compare different pairs. If you check on the Euro USD, it looks very clean because there is imbalance around here on Euro USD. So you have to compare all of those pairs. So it is taken. We have another block here. It can be broken the same way. We've been seeing that around here. But your job is not to trade towards here, towards this low. Your job is to trade towards this area, this inside this monthly level. Because the market may decide to go higher, right? So you keep trading towards this move to the downside. So what do? You go to weekly. And weekly, this is your key level. Your key level was created. So you have to start this week with bearish in mind. This week that is testing, you can see it is what we call a bullish reversal. A bullish reversal, if you remember 5 types of candles, if you watch those videos you have, you can easily see that a bullish reversal is a candle that has what? A strong wick to the upside, as you can see, like this one. So where does it come from? From testing another block. It opens near the key level, and there is no other option except what? To reject accept to reject. Okay, so this is another key level. It was not tested. So we ended the week with indecision candle, or it was a consolidation week. So don't be surprised if you see another week coming back here to test this key level, and then we go down around here. Okay, so be with that, trade with that in your mind. Okay, so next week, you can see we've been consolidating. Don't be surprised if you see a new candle start here and then comes back around here and then go down, or it may even trade lower around here and then come back, then it can also go down. So you have to understand. So currently we have this key, this is your area, this is your key level. Okay, so this is your key level on the daily time frame. I mean on a weekly time frame, as you can see. This is your key level on a weekly time frame. So on a daily, you can see what you have here. Still the same, and you can also refine it to this area. If necessary, I will show you how, but I think I have a video about that, how to identify, how to define some kind of hidden key level, hidden POIs inside these areas. Okay, inside these areas. So this is your key level. This is your key level. So when the market was leaving this area, this is your key level. This was your weekly candle. Vertical line, of course. These are your weekly candles. On the daily, you can see how market, how weekly candle purged what? Purged the high. Purged the high. You can see. Purged the high and rejected. So you have to start another day with bearish in mind. This was a bearish day. So after that, remember, always stay away on Friday. This was a Friday. Friday will always likely going to be a counter trend move. If you are bearish, Friday is likely to be bullish. Because why? Because every candle, most of the candles will have a high and a low. If this is a bearish candle, it will have a high and a low. If this is a weekly candle, for example. So how is this low will be formed? This law will be formed because by seeing week Friday candle reversing, trying to go up. If you are bearish, Friday is likely to go up. If you are bullish, Friday is likely to go down. So you have to pay attention to that. Then this is how you should mark your key level. If you are going to trade daily candles, if you see opportunity that matches what? The opportunity matches your setup, trade it. If you don't see it, run away. For example, these areas, these are the daily candles. If you check on 4 hour, so what was the key level for this day? Of course, we're expecting a purge to make the high of the week. Around here, your key level can be this 4 hour order block we have here, and also this already high. Okay. So the next candle, this one, you can see price traded on this area and tried to engulf all of these candles like this. See how the market tried to come back to test is bullish candles. Is bullish candles, right? Then if you mark, remember you have to, when you are trading, if you have identified the zone, you have to mark what? You have to mark the high and the low, the high of what? Of your 4-hour candle. For example, if this is 21, you can see in the bottom, this is gonna be 1 a.m. candle, this is gonna be 5 a.m. candle. So this 5 a.m. candle, if this one does, if 1 a.m. candle did not purge this one, then wait for this one to purge. How do you know it's purging? It's when you check on 15 minutes for entry. It's when you check on 15 minutes for entry. It's when you check on 15 minutes for entry. As you can see, on 15 minutes, price purged, okay? After purging, another block was created around here. This is how you would catch the high of the week around there. Then the block is being tested. So you should be entering around here. If you go back and test all of those candles, you will see how many opportunities that were formed that you didn't take. Okay, so to be your entry. Then on another day, I'm gonna send a link. It's almost over. I'm gonna send a link again. You have to